Howdy, folks, and welcome to the Daily Coin. My name is Rory, and today is Wednesday, June the 1st, 2016. And I have the great honor of welcoming back to the show Mr. Steve St. Angelo, who is well known, well respected energy, precious metals, and mining analyst. And you can find all of Steve's great work over at srsroccoreport.com. Welcome back to the show, Steve.
Yeah, hey Rory, it's a pleasure. There's a lot to talk about, so I'm looking forward to talking with you.
Yep, we do have a lot to talk about, and I want to start. This is one of the things that you wanted to discuss, so I'm just going to start with that. And why do you Steve believe the metals are being manipulated?
Okay, the reason I believe the metals are being manipulated, we already have proof. Deutsche Bank came out and said it. But
Exactly.
What's happening is, they're actually manipulating the spot price. Now, to what degree and to what level are they keeping it under? They're keeping it capped. But this is one part of the manipulation, is to keep the gold and silver prices capped. And the reason why I believe, Rory, that the metals are manipulated is because Wall Street and the U.S. government have bamboozled Americans as well as other governments across the world to force their citizens to put their money or funds since the 1970s, let's say 1980, they've kind of push them into putting their funds into paper assets. That's the manipulation. That's a Ponzi scheme. It's been a 36-year Ponzi scheme. And so the manipulation, the overall majority of the manipulation, where most people are still invested, 401ks, pension plans, bonds and stocks and all the paper, that's the manipulation. See, because when you have a gold coin, and you own it, it's in your pocket, you paid for it. You've either sold something or you've done some work, and now you've got that stored economic activity, economic energy in your pocket, or let's say in a safe. So now when you take that silver or gold coin out and you want to sell it, somebody else has to either do a service or provide you with a good to equal the value of that. Now all these pension plans and 401ks, they are IOUs, because this is what's interesting. Ever since, let's say, the beginning of 1980, the U.S. debt was like $865 billion. That's all the U.S. debt was, $865. Well, what's interesting, the stock market, the Dow Jones, was 865 points in the average in the first quarter of 1980. So we had 865 billion in debt. We had 865 Dow Jones average. Let's fast forward to today. The Dow Jones is 17,000, let's say 700. U.S. debt is 19.2 trillion. So what's happened is that the debt has increased 22 times and the Dow Jones has increased 21 times. Well, anybody will tell you, let's say you got $1 million in assets, but you got $1 million in debts. What is your net worth? It's zero.
Exactly.
So if you figure that all these paper assets out there are based upon debt, they're not really worth anything. It's a Ponzi scheme. That's why they need people to continue putting their money into the 401k, or let's say government pension plans. They continue to need people putting their money in the pension plan. And so this is the manipulation. Even though Deutsche Bank and the Comex and JP Morgan might be capping the price, the real manipulation, the real force is keeping Americans and other citizens out of the metals and into increasingly worthless paper assets. And it's all based on the energy. And so the last thing I'm going to say about this is the energy is the most important thing. It runs the system. Well, the U.S. energy sector, Rory, is in such bad shape. They have $370 billion in debt. And in 2015, just to pay the interest on the debt, Rory, they didn't pay the debt down. Just to pay the interest on the debt, they paid 48% of their operating profits just to pay the interest on the debt.
Wow.
And in the first quarter of 2016, because the price of oil dropped so low, it was 86% of their operating profits just to pay the interest on the debt. Now, the debt that matures this year is $5 billion. Next year, it's $25 billion, and by 2020, it's $52 billion. So the U.S. energy industry is in severe trouble. I don't think oil prices are going to rise here. I think they're going to fall. $50 is going to be a ceiling, unless we have some kind of Middle East black swan or something, but that will be temporary. It won't be long lasting. So the issue is, and one last data point. In 2015, we spent a lot of money. The world spent a lot of money. We found 2.8 billion new barrels of oil. That's pretty good.
Yep.
Unfortunately, we used 29 billion that year barrels of oil. We only replaced 10% of what we consumed. So we're living on past expiration, past reserves when we're not finding a lot of new oil. And now I think going forward, it's going to be big trouble. We're going to have big trouble with energy. And so energy supports this whole debt-based, highly leveraged paper system. And when energy production declines, as well as oil prices decline, it will help pop that paper bubble, Rory. So that's the reason why I focus on the precious metals. That's why I believe they are the best assets to own, and that's physical gold and silver.
Yes, physical gold and silver, which the energy story tied to precious metals, they're joined at the hip because of the sheer volume of energy that is required to mine gold and silver, copper, lead, tin, all the other base metals as well. So in order for our world to function, these mines have to continue operation. The only way they can continue operating is by having inexpensive or cheap oil. And as that is depleted, as you just pointed out, then we have a real issue. And that issue is not going to be addressed very easily because you can't, solar power or wind power will never make one of these gargantuan mining equipment run. It just won't. Not to my knowledge. I mean, there's just not, they don't produce enough energy.
No, that's correct. To run one of these caterpillars, I think it's a 797F. I might be off on the serial number there, but it's one of the largest haul trucks on the planet. It gets 0.3 miles per gallon.
0.3.
Fuel consumption. Yeah, it gets 0.3 miles per gallon. And the thing is, it moves 400 tons of ore at a pop. But there's just too much condensed energy in a gallon of diesel that you can't really make. You can't have like a huge, long electric, let's say, electric extension cord. It just wouldn't work for the mining industry.
No.
There's some work on it, but no, you're right. The amount, I think, the amount of fossil fuels, or let's not use that word, oil, gas, and coal, is like almost 80% of the consumption. And I'm not including nuclear or hydro. Renewables right now, it's like about 9% renewables. And most of that 9% is biomass. It's not solar, wind, or hydrothermal. It's biomass. That's so you're correct. We don't have any solutions for that.
Exactly. And as I'm sure you're aware, Steve, China and India and Morocco, they all have these massive solar programs that are well underway. And I just learned that Texas is moving towards incorporating large-scale solar programs. And this is to say nothing of Germany being the largest generator of solar power right now. With all of this solar energy coming online within the next 2 to 3 years, what impact will this have not only on the oil industry, but if these countries the size of China and India find themselves using, for example, 5% less oil, That's each country. In your opinion, how would this impact the overall market?
I think it will impact the overall market somewhat. I think, Roy, the only place it will impact oil would be India, because India uses diesel to run their old generators for their farms. Most of the impact solar has is on electric generation, which is natural gas and coal. Now, what's interesting, if the forecast is correct, right now in 2015, let's just go back to 2010. The 2010, the world added 17 gigawatts of solar. 2015, it was 59 gigawatts of new solar installations, and in 2020, they're forecasting it's going to be 92 gigawatts that year. So it's almost double, not quite.
Yep.
Now, what's interesting, according to GFMS World Silver Survey, the world consumes 77 million ounces of silver to produce those 59 gigawatts of solar installations. So if we figure that they're going to forecast 92 gigawatts of new installations in 2020, and that's only 4 years away, that would consume 120 million ounces of silver. And so I originally didn't think solar.
Hold on. You mean 150, right? Because 77, if it's doubled, would be.
Well, here's the thing. They estimate on 59 gigawatts, which is almost 60.
Okay, I'm sorry.
So it's not quite double. It's like maybe a 70%. So
okay.
They figure it's about 1.3 to 1.4 million ounces of silver per gigawatt. That's what they figure. So I took 1.3 and times it times 92, and I came up with 120. So it may become a little bit more efficient, but according to the analysis, silver only constitutes 5% of the solar panel, of the cost. That's it, 5%. So the silver paste that they use to manufacture the solar panels, with it being 5%, they don't really see that much of a drop because it's only 5% of the panel. And so that's why if we do see that much new solar, I don't think we will, but if we do see like 92 new gigawatts in 2020, we'll see it'll jump from 77 this last year to 120. So that's additional silver off the market. So that's a good thing.
That's a significant amount. I mean, and right now, I just spoke with the doc over at SD Bullion. I just spoke with him yesterday, and it looks like we're on pace for this year, just for American Silver Eagles and Royal Canadian Mint's Silver Maple Leaf. Just those two coins alone, we're going to be close to 100 million ounces of silver just for those two coins. That's what we're on pace for right now. I mean, and that's to say nothing of any of the other silver products out there as far as any other coins or bars, rounds, nothing else. I mean, that is a phenomenal amount of silver for two coins.
And I agree. What's interesting, I put an article out not too long ago showing that in 2001, the U.S. and Canada, they produced together about 96, 97 million ounces of silver. The United States was a lot more than Canada, but still, 2001, 97 million ounces of silver is pretty good. Well, I think that year, there was only like 9 million ounces of U.S. Eagles and Maples. Can you imagine that, Rory? Less than 10%. And in 2015, it was a little bit more than 81 million ounces of Eagles and Maples sold. So it's skyrocketed. It's almost 10 times. Well, production from these two countries is now about 47 million. So they have to import 33 to 34 million ounces of silver just to cover the Silver Eagle and Maple program. And if you say, I was figuring 90 million plus, but if it does hit 100 million, that's like another 18, 19 million ounces that has to be imported just to cover this program for these two official coins. That's a lot of silver.
That's a lot of silver. And I want to revisit solar for just a second, if you don't mind. And with all the solar that's coming online, um, what kind of impact do you see that having on the mining industry? I mean, from an operating cost perspective.
I do think the operating cost, if we don't have hyperinflation, I think the operating cost for the silver miners will remain probably, it won't remain in the range it is right now for the next several years. It could fluctuate, could rise a little bit, but I think it will remain in this range that they're at right now, because I don't see the price of energy rising, the price of oil especially.
Okay.
So that's how I don't think the mining cost will increase, but I do think the price will increase, and part of it might be due to companies who use silver are going to the miners and actually taking their production off the market.
Well, it leads me right into my next question, because the silver pie that we've been talking about is continually shrinking. The amount available above ground silver, as we have been reporting here at the Daily Coin, actually reported on April the 24th with CEO Keith Neumeyer of First Majestic. And he was contacted by one of the large technology companies for a direct supply of silver. China, as I'm sure you are aware, has been quietly purchasing mines or controlling shares of mines around the world, primarily gold, but my guess is silver as well. How will this change the whole dynamics of mining and the mining industry as more companies go directly to the source and China and possibly other nations continue acquiring mines?
I think it's going to be a big deal, especially for the precious metals, gold and silver. I don't see it that big of a deal for base metals. I don't see a lot of good things on the horizon for base metals. I don't. I think they're going to be a lot of them, just like oil. I mean, I don't know if you saw the recent Zero Hedge article about the oil tankers.
Oh yeah,
there's a glut in the oil market because China is absorbing a lot of oil right now that they're not consuming. They're stockpiling it.
exactly.
And so this is how I look at that. I think. Well, this is one interesting data point. Ever since August last year, the Shanghai Futures Exchange, they kind of bottomed at 7.5 million ounces of silver on the exchange. I just checked today. It was up a little bit maybe a few weeks ago. It's fallen a bit, not much. But they're now at 61 million ounces. That's a big move.
That's huge. They
went, it is huge. And so the COMEX is actually less. I think it's fallen maybe 8 to 10 million ounces since the same time period. So we're not seeing silver on the exchanges increasing in the United States or in Canada on the COMEX. However, it really did increase in China at the Shanghai Futures Exchange. And I do think we're going to see the reason Japan also, I think Japan is acquired or is looking to acquire silver streams from silver mining companies,
mm-hmm.
is because Japan actually was the largest producer of silver powder for PVs last year. There was 37 million ounces. The United States was 30, and China was 10 million. So the raw material to produce solar, Japan was the highest. So I think they're starting to see the writing on the wall, as so is probably China. And they are acquiring more silver, and it would be wise, I think, that more companies, manufacturing companies, acquire guaranteed silver streams or silver production, and they may have to pay more for it. And so I think this will be interesting going forward, especially when we start to see the market crack, because you can't really store oil. You have to shut the oil production down. And then base metals, it's like there's a lot of base metals, there's a lot of copper out there. But however, if there's very little gold and silver in the whole scheme of things as wealth. So I think if you add industry consumption of silver, and then you add what's going to happen when the markets crack and people want to get into silver, I think I think silver is going to be the most strategic asset and the most. I think it's going to move the most out of all metals.
Oh, yeah, I would agree with that wholeheartedly. I mean, there's hardly any available, and I just see these large technology firms going directly to the mines and either buying them outright or making contracts, or, cutting contracts with people like First Majestic to say, hey, how much can you supply me with each month? And I just see that, which would completely divert everything away from the market. We would never see it. And the mines and the production that China is purchasing around the world is never seen. We don't know how much it is, and it just disappears from the market. I mean, it's crazy, because if the China National buys a mine, they're never going to report that production ever. They don't report what
No,
they
they'll
have
keep
now.
their production.
What's
They'll
that?
keep their production. Yeah, China will keep their gold and silver production.
That's correct.
And if they purchase other mines, of course, they will keep that production as well.
Right.
So it's probably in their best interest to purchase physical assets. Especially, to me, it would be wise to purchase the metals, like the precious metals. And here's an interesting. This is the reason why I think silver is so undervalued. I've got a chart here, which you're the first person to hear about it because I'm going to put it out in an article today. In the first quarter of 1980, gold averaged $620. That was the average. It hit a high of $850, but the average for that quarter was $620. Well, what is it today? It's $1,210. It's almost double. Now, oil was $36, actually $36, way back in the first quarter of 1980. Well, it's $48 today. Now, it's not double, but it's higher by a certain percentage. Well, what's silver? Silver was $35 in the first quarter of 1980. It's $16 today. And half of the silver that we've mined since then is gone.
Yes.
And a good percentage of jewelry. You see, I mentioned this before. 200 million ounces of silver is consumed in jewelry. But you know what? No one really pawns silver jewelry that much. Some, but gold is pawned because there's a lot of value to go to the pawn shop and get $500 or $700 for gold jewelry. But silver, according to the analysis I've seen on scrap supply, very little silver is returned from jewelry. So it's kind of stays out there. It doesn't get recycled. So that's another large section of the market. Not only is industry gone, a lot of industry is gone forever, silver, so is jewelry. Unless the price of silver goes to $500, I don't think we're going to see a lot of silver coming from jewelry. So it's just amazing how little silver there is in the market compared to gold.
And speaking of scrap, I go to the flea market every month, and there's one of the dealers that I conduct business with, and he does a huge amount of recycled silver. And people know that he buys silverware, jewelry, whatever. And it's very interesting that you make that comment about the jewelry, and that you said it was 200 million ounces of silver jewelry per year.
Yes.
Wow. Because there's never any jewelry. Never. There's never any jewelry. It's only silverware, and that's really all that it is. I mean, there's never any jewelry.
No, there isn't, and I wish I had the actual data right in front of me. But I looked at there's a new silver recycling, and it tells us how much of silver is recycled, and from what different categories, and silver jewelry and even coin are a very small percentage of the
Yes.
overall total. What is silverware? Because I mean, you get a case of silverware from your grandmother. There's a lot of silver in. There's a lot of
Uh,
silver in that. It weighs a ton.
yeah.
But you would have to. Most people, when they buy silver jewelry, they get a necklace, they get a couple of rings, and then you put them in your hand. There's really nothing there. There's really not much weight there. It's not really valuable to get it recycled. So you figure all this jewelry that was manufactured in the last 10 years, it still sits out there, and it really won't come back into the market unless we see triple digit or $200-300 silver. Then we would see that, and I don't even think it would matter at that point, Rory. I think when silver does get to such a high price, people are worried. Well, a lot of silver will come back on the market, and that could depress the price. There's just way too many paper assets out there that are debts that really
Yeah.
aren't worth it. And so when you figure when those start to implode, there's still even, I would imagine, I'm guessing it's about 4 billion ounces of silver bar and coin, and let's say 1,000-ounce bars out there. That's out there right now, somewhere in the market, private or in public hands. There's about 4 billion ounces of that floating around. Maybe more than that, but that's about a figure I came up with, about 4 billion ounces. There's a lot of jewelry. There's probably, since the 1970s, there's probably, gosh, I would say there's probably 5 billion ounces of jewelry out there, and that's just recent jewelry. But that doesn't really come back into the market. So even if you would say 10 billion ounces of silver, even if you could get that much silver and you hit $100, what is 100 times 10 billion?
A lot.
It's like a trillion. 1 trillion for all the silver in the world, and right now there's 100 trillion of conventional paper assets under management. Insurance, mutual funds, retirement accounts. And as you said, the insurance industry is bankrupt.
They're completely insolvent.
So
They
when you
are
think
insolvent.
of all this silver you could get in the world, if you could get 10 billion ounces of silver, which you can't get, and you times it times $100, it's $1 trillion. If I'm correct with my math, I hope I'm correct with my math on that. Because I'm thinking $100 times 10, yeah, it would be 10. I am incorrect on that. $100 times 10 billion would be $1 trillion. So it'd be 1% of all the outstanding paper assets.
Wow. That's amazing. Well, I think that's probably a good place for us to wrap this up, Mr. St. Angelo. And we have been speaking with Steve St. Angelo, who is the proprietor over at SRS Rocco Report. And that's where you'll find all of his great analysis. And Steve, I certainly appreciate all your time and all the wisdom this afternoon.
Yeah, you too, Roy. I'm glad we continue to put out the fundamentals and the facts, and I think as more and more people understand the fundamental and facts, and I get new visitors to my site, and I know you do, I think more and more people will wake up and realize that they're invested in the wrong things. And so, unfortunately, the game of musical chairs, when you get 10 people and there's only 9 chairs, well, there's going to be 10 people in one chair. That's unfortunately how it's going to end up. So only a few people can get into the metals, and that's the unfortunate thing. So what that's going to do when you've got 10 people looking to get one chair, it's going to push the price up. We don't know exactly when this is going to happen, but it's just a matter of time.
As I believe it's Craig Hemke over at TF Metals report, economic mother nature is going to come back into the market, and when she does, she's not going to be very happy. And
No.
if you're not holding a chair or already seated, forget about it. Ain't going to happen.
And unfortunately, that's the case. Unfortunately, that's the case. It's sad. It really is sad.
It really is.
It's been a
Well,
pleasure, Rory.
it has been a pleasure, and we will do this in the not too distant future, Steve. And I certainly, once again, I appreciate all your time.
Look forward to doing it again.
All right.